Thanks for watching Lessons in Minutes with Jaylee. Like, share, and don't forget to subscribe.
Today's lesson will focus on the financial statements of a limited liability company. What are the objectives? At the end of the lesson, you should be able to prepare an income statement, including an appropriation account for a limited liability company, and to prepare a limited liability company statement of financial position. And we all know that the statement of financial position is a balance sheet. So we're going to look at the income statement of a limited liability company and a balance sheet of a limited liability company. We begin with the income statement, and the income statement of a limited liability company is the same as that of a sole trader. However, there are few expenses that are relevant to a limited liability company. So when you're doing the income statement, the same process you'd go through in calculating your gross profit, your net profit, is the very same process that you will take, the same thing that you would do for the limited liability company, except that when you're listing your expenses in order to calculate your net profit, there are a few expenses that you have to look out for. And these are director's remuneration, auditor's fee, and debenture interest. So when you're doing a limited liability company question, look out for these expenses. Now, after you have generated the profit, after you have calculated the profit, then we prepare what is called an appropriation account. The appropriation account is prepared after to show the profit, or the profit is shared to shareholders in the form of dividend or retained by the business as reserve. So that is the income statement as it relates to a limited liability company. Don't worry, because I'll be doing a work example. For the statement of financial position, same as that of a sole trader, except that the capital section is replaced with an equity section that shows details of shares and reserves. When I say the capital section, I'm talking about the section where you would have your opening capital plus your net profit, less your joins, and then you would get your closing capital. That section is replaced with a section called equity and reserves. It's the equity section of the limited liability company, and it shows the shares along with the reserves. Now we're going to take a look at a work example, and that question is taken from January 2012, number 6. And the question reads, the following is the trial balance of Flavor Fruit Limited as at December 31st, 2010. You're presented with a list of balances. Along with that, additional information, the company provides for depreciation on fixed assets at 5% of cost. Because it said at cost, you know that you're using the straight line method. So in calculating, that would be the 5% of the fixed asset value, which is 440,000. The company maintains a provision for bad debts of 5% of year-end accounts receivable. This means that you're to calculate 5% of the accounts receivable, and that will give you the balance of provision for bad debts. But remember, you need to determine whether it is an expense or a revenue based on your calculation. And remember, based on that, if it is that the provision for bad debts balance for this year is greater than that of last year, it means that there is an increase. So therefore, the difference is shown as an expense. However, if it is a reduction, the difference is shown as a revenue. So what you're required to do is to prepare the income statement for Flavor Fruit Limited for the year ending December 31st, 2010. We're going to do part A of the question before we look at B and C. We're going in stages. So A, we're asked to prepare the income statement. So in preparing the income statement, you have to go to your trial balance, assess the list of balances, and look at where you're going to begin. That is a tip. So in exam, look at where you should begin. If once you see gross profit, like in this question, gross profit is there, so it means that you're going to start from gross profit. If it is that gross profit is not presented and you're seeing sales, purchases, all those details used to generate your gross profit, then you'll have to start from there and then you proceed in calculating your net profit. So we're going to start with gross profit and taking into consideration the additional information that is presented. And based on what we're seeing, we have gross profit, we have revenue, so we have to add additional revenue, proceed to less your expenses, and then you calculate your net profit. So that was done previously. So we have the heading, which is Flavor Fruit income statement for the year ended 31st of December 2010. Your heading is very important. And we begin with gross profit. So based on the question, our gross profit is 147,500. That is what is entered there. So that's the gross profit. Our next step, because there is a additional revenue, we put in that, which is the 2,600 for commission. There's no other revenue, so you proceed to add those two figures together and you get your total revenue of 150,100. Now, after entering your total revenue, our next step is to pick up our expenses, and we're going to list the expenses, but just a quick look at what are the expenses. We have, based on the list, our expenses would be the provision for depreciation, and the provision for depreciation is calculated 5% of the total fixed assets, the fixed asset value, which is 440,000. So we have that. We have bad debts. We have provision for bad debts based on calculation. That is an expense as well. Wages and salaries. And when you're going through, this question doesn't have any accruals and prepayments. But remember, when you're going through, you have to look up for your accruals and your prepayments. If there's accruals, you add. If there's prepayments, you subtract. Rent and rates, motor expenses, building repairs, and office expenses. And those are the expenses based on this question. And all of those expenses are listed. The expenses are listed, and the total expenses there is 97,250, and the net profit is $52,850. I'm going to take a quick look at the provision for bad debts there, because you may be wondering why it is $200 and why it is listed under expenses. Just as a reminder, your additional information, the company maintains a provision for bad debts of 5% of your end accounts receivable. That is 5% of your debtor, which is 14,000, and that will give you 700. Because this year's figure, which is a figure from your footnote, is greater than last year's figure, which is a figure from your trial balance, then this increase in the value of 200 is listed as an expense. If it is that this year's figure was lesser than last year, then of course the difference would be recorded as a revenue. Okay. Now for the provision for depreciation, the additional information stated that you're to calculate 5% of the cost of the fixed assets. So it's 5% of the 440,000. And because it's the off cost, it is a straight line method. So therefore it is 5% of 440,000. And that gave us $22,000. This question did not this question did not test your knowledge on the expenses that are relevant to the limited liability company. But once you're doing an income statement for a limited liability company, remember to look out for your director's remuneration, your auditor's fee, and your debenture interest. And every question is unique. You may find all of those expenses in a particular question. Likewise, you may find just one or just two or none, like in this case. But you need to remember those things. All right. Now, the thing that I'm going to look at now is the appropriation account, where you're asked to prepare for part B. And the additional information reads, the company paid its preference share dividends. How do we know the value to be paid out as dividend to our preference shareholders? In the question, in the trial balance, you're seeing 5% preference shares at $5 each, and the value of that is 100,000. What this 5% is saying, it is the rate to be paid out to our preference shareholders as dividend per year. So in calculating the dividend for preference shareholders, we have, as you're seeing right there, preference dividends, the rate, that is the percentage beside the term or the item preference shares multiplied by the value, and that give us $5,000. So our preference share dividend for the period is $5,000. Additional information provided, an ordinary dividend of 10 cents per share was paid to shareholders. An ordinary dividend of 10% per share was paid to shareholders. How do we calculate that? So in calculating our ordinary dividend to be paid out to our ordinary shareholders, it is, as they said, 10% per share. And because it is per share, you have to, this is a formula in calculating that. So that is value of shares, the value of the shares divided by the par value times the rate. The rate is a 10 cents per share. To get the value of shares, you go to your trial balance and you look, you see ordinary shares, $1 each, 75,000. This $1 represents the par value. So it is a 75,000 divided by the $1 par times the rate of 10 cents. Now, this one is relatively easy because the $1 is, once you divide the 75,000 by $1, you get the same value as 75,000. That would be the number of shares. However, some questions as $2, $3, once it is more than $1, you have to be careful, ensure that you divide the value of the shares, which is under the $sign, under the amount in the amount column, by the par value, and then you multiply by the rate once it states per share. Some question, they don't give you the par value, so therefore you would just multiply the amount, the value, by the rate to be paid out to your ordinary shareholders. So based on calculation, our preference share dividend is 7,500. So that is the 75,000 times the 10 cents equal to 7,500. Additional information for the appropriation account, 15,000 was transferred to a general reserve. And there are other reserves that may come up in the question, such as foreign exchange reserve, right? So those would be a part of the appropriation account. In terms of a dividend, the 5,000 right here and the 7,500 for the ordinary shares, that is shares dividend that should be paid out, and it is not yet paid. It is referred to as proposed dividend or final dividend. This dividend, once it is in your additional information, it is owing. So when you're doing your balance sheet, you show that as current liability. So your proposed dividend, also referred to as your final dividend, once that information is in the additional information as well, it means that the dividend is not yet paid. So therefore, that must be shown as current liability when you're preparing your statement of financial position. If you're seeing in your list of balances, your trial balance, interim dividend, it means that the dividend is already paid. Yes, you're going to show it as an appropriated item. However, when you go to the balance sheet, because that amount is already paid, it is not shown in your balance sheet. So only if it states proposed dividend final dividend, or if the information is in your footnotes, it means that your dividend is not yet paid and therefore is to be shown as a current liability. At this stage, we're going to prepare our appropriation account. And in doing the appropriation account, the first thing that you would do is to enter your heading. And it is Flavor Fruits Appropriation Account for the year ended December 31st, 2010. Please note that it could have been in one. You could have been asked to prepare the income statement and appropriation for Flavor Fruit. But in this case, because it asks you in A to do the income statement and then B do the appropriation account, you show them separately. So the first thing in doing your appropriation account is to enter your net profit, because this is what you'll be sharing. You're showing how that is appropriated. Now, in doing the appropriation account, if it is that there is any corporation tax, you would subtract that from your net profit, and then you would add your retained earnings coming from last year, etc. We're starting with net profit, and it's the same net profit that you have calculated in your income statement that you're transferring to your appropriation. So that is $52,850. Earlier I mentioned corporation tax, so we need to check the question if there is any corporation tax based on assessment. There is none. So we're going to move into adding retained profit from last year or retained earnings from last year. So in your question, in your trial balance, once you see retained earnings, let me highlight that for you. So once you see retained earnings, in this case, it is $32,150. That is then added to your profit that you have calculated this year. So that retained profit is added. And in some questions, you may not see the term retained profit. If you see profit and loss in your trial balance, it is the same retained earnings. If you see unappropriated profit, is the same thing. Okay, so this is then added to the net profit. So we're going to add retained profit from last year, and the value for that is $32,150. When those two figures are added, we get $85,000. Now, our next step is to proceed to less our appropriation. So we have less appropriation. You can shorten it by saying less up. We are paying out dividend based on calculation and information given. We are paying out preference dividend of $5,000 and ordinary dividend of $7,500. We're going to make a note of that. So we have preference dividend, and that is $5,000, and we have ordinary dividend of $7,500. So in total, we are paying out dividend of $12,500 from the profit. Next, we are going to enter our reserves. We're entering our reserve. We'll go to your question to see what you are reserving. If there is any reserve in your trial balance, those are not listed as reserve in your appropriation. Yeah, what you're putting in your appropriation is what you have as your additional information, which is saying out of the profit that we generated for this year, put this down as general reserve. Put this in our foreign exchange reserve. Put this in our fixed asset replacement reserve. Okay, so based on this question, there is only one reserve, which is the $15,000 general reserve that we have. So here we go, general reserve, and the value for general reserve is $15,000. We're going to add these two figures together. Add those two figures together, and we get a total of 27,500. That is what we are paying out from the profit that was generated for this year. And we're going to minus 27,500 from 85,000, and that gives us a value of 57,500. This 57,500 is referred to as our retained profit carried forward to next year. Okay, so that profit is reserved in the business for the next year. The retained profit itself right there carried forward to next year is also a reserve. When you go to your balance sheet in your equity and reserve section, that should be listed there. So it's similar to when you're doing the sole trade and you would take over the net profit to the balance sheet. We have appropriated the net profit, and what is left, we take that over to the balance sheet as well. So this is a typical example of an appropriation account. And what is missing from this question, appropriation account, is the corporation tax. If there's corporation tax, remember, you will subtract that from your net profit. Add your retained profit coming from last year. Remember, another term for retained profit is unappropriated profit or retained earnings. Or if you look in your trial balance and you see net profit, that it means that that figure is coming from last year. So then this is added to our current net profit. In your appropriation section, you would list your dividends that you're paying out. If it is that there's dividend in your trial balance, it is listed here as well as interim dividend that is already paid. And you would also put your dividend from your additional information like we did in the appropriation account. But when you go over to your balance sheet, remember the figure coming from your additional information, or if it states proposed dividend or final dividend, it means that this dividend is not yet paid, so it is listed as a current liability. All right. There are other reserves. Based on this question, there was only one general reserve, but you have fixed asset replacement reserve, you have foreign exchange reserve, etc. Those reserves would be listed right here. And remember, only if they're provided in the additional information, or they say provide for general reserve, etc., then of course you put them in your appropriation. Once it is in the list of balances in your trial balance, those are the figures that is already in the account, that is the balance already in the account. So therefore, all you're doing when you go to your balance sheet, you put them together to get a total of the reserve that you have in the account. So we're going to move over now to part C, where you're asked to prepare the capital and reserve section of Flavor Fruit Limited balance sheet. So we're now going to do part C of the question. So for part C, that will be done right here in Flavor Fruit. Remember to write your title, Flavor Fruit Balance Sheet Extract as at December 31st, 2010. And you were asked for the equity and reserves section. And that is why I refer to it as extra, because it's not the full thing, right? So in doing your reserves section, you pick up your share capital. And based on the question, we have ordinary share capital and we have preference share capital, right? So therefore, we're going to start with our equity. And the equity, we have ordinary share capital, right? And those are your issued, just make a note of that, issued capital. And the amount for ordinary share capital, let's go back to the question and pick up that is $75,000. So you record that there, 75,000. Next, we're going to pick up our preference share capital, which is $100,000. So we're listing preference share capital. and the amount is $100,000. Next, we're going to add those two together. So we have a total share capital of $175,000. And we are now going to move into entering our reserves. And the reserves based on the question, once you have share premium is a reserve. So from the question, we have share premium of 25,500. That's the first reserve we're going to enter. Share premium is a reserve, and the amount coming from the list of balances is 25,500. Also, we have reserve of general reserve. If it is that in the trial balance, there was general reserve listed there, you would add this 15,000 to that value because it is saying that is a value that is already in the account. And this year we are transferring 15,000 more. So that would increase it. But in this case, there wasn't any. So all we're recording is just the 15,000 for general reserves. So we have those, and remember there are other reserves, but not in this question. Remember, each question is unique. And the final thing that we're going to record as our reserve, don't forget your unappropriated profit, also referred to as your retained earnings, also referred to as your retained income, also referred to as your profit and loss that is carried forward to next year. So we're going to put retained profit, and the amount there is coming from what you have in your appropriation account, that final figure that you have generated in your appropriation account of $57,500. Now, this figure, you're going to add it to the other two reserves that we have. So in total, we have 98,000 as our reserves. What do we do with the reserves now that we have calculated that? You're going to add it to the 175,000 share capital, and we have a total of $273,000. Right? Now, you can refer to this as your total equity and reserves. So that is our lesson on the income statement and the balance sheet for a limited liability company. For this question, we did not do a full balance sheet. I will prepare one in another session. But remember, the section that we have not completed would have been this. It's the very same thing as the sole trader, where you would put in your fixed assets, then your current assets less your current liabilities, get your working capital, add your working capital to your total fixed asset. And if it is that you have long-term liability, you would subtract that, and then you would get your net asset. Moving out of your net assets, you would then jump into your equity and reserves. And this is that section that is different from the sole trader. Okay, so that is it for this lesson. I'll see you in another lesson where we look at preparing a balance sheet for a limited liability company.
Like, share, and don't forget to subscribe.